Today's price action led to a breach of an invalidation zone that can lead price to a further downside target. The plays feel like they're about to happen, and I felt that it was immediately important for you to watch this video. I have identified two bearish formations and a rare 12-hour manipulation strike. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol NVOS. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol NVOS, and let's go ahead and identify a few things here. So I know that if you were watching me live a few days ago, I actually spoke about this. Sorry, you guys, my little guy is right next to me, right? So if you hear him, he's just saying hello, right? So so if you're noticing here, we identified a falling wedge that had a possibility of actually failing and going to the downside. So, and that it did. Right, so this was today's price action. This was yesterday, and we identified it around here. Right, so we broke beneath it, and the price action essentially came and failed. I mean, it didn't fail. It actually just continued with lower highs, and then came right back up and has tested that resistance of the triangle 2 times. This test of the triangle has led to something very specific. Okay, so I have. Just hold on, you guys. You're gonna have to bear with me here because this is actually something very important. I need to share this with you. Okay, I prepared it. This is called a right angle descending broadening wedge. Okay, so and it's following the golden rules pretty steadily, and it's also following geometrics and statistics very, very, intriguingly enough, very perfectly. Okay, so. You know right away what I speak of as a golden rule of 3, right? You have the test number 1 of resistance, 2 and 3, followed by what? That's right. If you're around this channel, you know capitulation is next, and that usually signals the potential of a completion and succession of the test number 3, right? So that would be immediately a continuation to the downside here. So if we are going to get a downside continuation, how can that be? Well, honestly, it's just, it's part of the play. First of all, I can see that we can get a short term. It's a potential. Okay, it's a very, very. It's just a potential. All right, we can get an upside here, maybe to test the resistance level of the linear regression band, which typically happens when we close beneath it and still have some proximity close to that mid band. Okay, so we can come back here, test the mid band, and this would be an area for short opening, okay? So from this zone here, this would immediately start to fail, and it would start testing the bottom band and also the bottom regression of the formation itself. So if that starts to happen, team, that's going to be the first signals here that this is about to capitulate and fail, because all we need here is for price action to close any hourly candle beneath $1.21 for it to continue on to a downside. The target that you would get from this formation here is actually taken. Let's just say that it were to fail here at around tomorrow afternoon or something, right? So let's just imply that, right? Let's just say that it would. You take a trend line from the top side of the top side of the formation all the way to the bottom side, and you apply it to that area of breakout or breakdown, right? So that gives you a target of $1. Now, I need you to remember this dollar mark, okay? I need you to remember that target. Let's go ahead and move on to the next chart now. Okay, so this is a larger time frame now. This is the 12-hour. We were observing here the hourly time frame, so we're keeping a closer eye on price action, right? So really magnified here. So now let's pull out, right? Let's zoom out and take a look at this, okay? Hold on, buddy. Hold on just a sec. Hold on, buddy. All right. So I'm sorry, guys. He's just getting excited behind the computer. I don't know what he's pulling, right? So, okay. This is an inverted cup and handle, okay? The inverted cup and handle does have similar characteristics to the regular cup and handle, to where it leads to the top side. You get the price objective by taking a trend line from the top of the cup, right, all the way to the bottom of the cup, and then you apply it to the breakout zone. And that is actually leading to a target of about 79.89. And it's very confluent with the 2 spot 618 at 77.77. So geometrically, it is, and psychologically, it is leading to a confluent target. Okay, so I want you to be aware of that. Okay, so now if we were to treat this as like a little bit of I guess its own very small time frame cup and handle here, inverted cup and handle, then the top side target would be here, right, with a trend line all the way to the base, and you apply it to the bottom side, and this would actually lead price action down to about 106, which is confluent to the 1 spot 618 at 102. We're starting to get closer to that dollar mark, but that's not it. Okay, this is not it. I still want you to remember these targets, but I'm actually showing you how close I can get. Okay, so this is going to be to that 106 target and the 1 spot 618 golden mean at $1.02. Okay, so that's already showing confluence, right? So now the thing here is that this is I mentioned two bearish formations, right? There's actually three, um, and it's very hidden. Okay, so the other bearish formation is actually right. It's actually right over here. Let me show you this right here. Sorry, you guys. I know my little guy's just going insane back here. He usually does that when I start recording. He knows that I can't pay attention. Okay. So let me shine light on this right here. Take a look at this. Okay, and then we bring this visibility up. Okay, so what you're observing now is if we can take an arrow, right, and kind of point it downwards like this, and then start pointing it upwards like that. Let me just make sure that we can all view that arrow, right? So this is a dead cat bounce, okay, in a larger time frame, disguised within an inverted cup and handle. Okay, so I left the inverted cup and handle properties here so that you can see that it is a commonly traded formation, and it can lead to downside targets like that, right? Okay, so now we're going to be able to measure what this target is implying. But since we now know that we have a dollar mark down here, right, based on the take profit of this formation, take a look at where the dead cat bounce started. Started at $1. So that would be price action leading its way all the way down to $1. That means now we can adjust our profit, our take profit here for a short play. I have to look at it like this in order for you to understand it. Okay, I don't mean any offense by that. Okay, so that's going to be 99 or $1 to the top side of about 106 with a focus at 102, being the 1 spot 618 golden mean. Okay, so this is let's go ahead and put it down like that. I want to be as concise and as efficient as I can, right? So just kind of bear with me here, right? Okay, so now that would be the dead cat bounce, and from this zone here, there is a potential to where price action can come up to two different places. It can probably bounce to 119 and then to maybe 130 at the very top side, but that would just be a resistance validation. But to tell you the truth, I don't think that that's going to happen. If we face a continuation to the downside here, leading all the way to that dollar mark, that's going to create a fear. It's going to create a panic sell. Okay, and a FOMO event for shorts. So retail and institutional, all kinds of crap. So in other words, there is the off chance here that this thing may continue to the downside, even still, maybe even face the 2 fib or the 2 spot 272 at 85 or 92, and then bounce to get the validation of this as a resistance before continuing to its take profit target, which is what? Let's find out. It's not pretty, I can tell you that. Okay, so from the top side of the formation all the way to the bottom side of the formation, we apply it to that very bottom side, and that would be leading to a target that is confluent to the 4 spot 618 at 44.84, but it's 46.26. Okay, and we these are actually not valid. These were all targets based around the pre-split, right? So let's just go ahead and just get rid of that stuff there. So let's go ahead and focus this target here now. So that would be 44.84, 44.86 is fine, right? To that, what was it? 46.26. Okay. So this is the entire play. Okay. If you need to rewatch this video over and over, I would suggest so. Okay. Because I need you to be prepared over what we're looking at. 12-hour time frame, several drives of hidden bearish divergence located by my algorithm. We have a downside price action here on stochastic momentum, increasing volatility, meaning that we are hitting the gas on a downside pivot. Bearish crossover of the SMA 14, the RSI signal is facing downward, okay? And notice how the ADX now is sitting at a 17%. It is increasing. This means that the trend to the downside is growing in strength, while the DMI minus is on top. DMI minus is bears. Increasing ADX means increasing trend. Okay, so that's it's definitely not good. Okay, so let's go ahead and look at this from the 30-minute time frame in momentum. So yeah, momentum is actually still suggesting some downside here. It looks corrective, but I mean, historically speaking, this still could drop all the way down to 5%. We're currently sitting at 17, right? So just to kind of shed some light into that there. And let's see here. Yeah, the volatility is increasing right now. It is massively critical here on the 30-minute time frame. Let's go to the bi-hourly. Bi-hourly time frame is suggesting a short-term upside, which is the one that I'm saying that we could come back up to validate the maybe the $1.30 zone. I would say probably $1.30 to, I would say 130 to 135 could be the best, and there may actually still be there may actually be a rejection before that, right? So let me just go ahead and mark this off as a very deep red, because this would indicate, position short open right here, right? So essentially, price action would, probably bounce from 121, come up and get the 0618 at 135 or to the 130 bottom of the cup formation, and then start its descent from there, right? So now, let's see, bi-hourly time frame downside pivots. This, I think it's showing an upside based on this short-term upside that we got here, right? So let's go to the 3-hour time frame. Yeah, same situation here, but everything is facing downward, man. Okay, and so if we get this stochastic momentum upside, again, that would be to get that upside here and then resist. And if we do get that upside also, please take a quick notice here that the SMA 14 is above us, so we can resist from that SMA 14 and continue. 4-hour time frame, clean downside pivot on stochastics, increasing volatility towards that downside. Man, it is bearish engulfing, leading price action to the downside here. There's several signals here suggesting weakness in the market. 6-hour time frame downside pivot, increasing volatility with that downside. RSI completely below the SMA 14. The 6-hour time frame has it has a 19% ADX. 25% would be full on validation, and the DMI minus has led to the top side. Let's see the 8-hour time frame. 8-hour time frame downside pivot with expanding volatility. And this is sitting at a 22% already. Bearish crossover on the RSI and hidden bearish divergence drive here. So it's validated. Okay, so now let's see the 12-hour time frame. Yeah, so that's about as close as we're going to get. 22, almost 23%. That is enough for me to consider a continuation to the downside here, team. And I'm just putting out my warning like this, team. I want to be as transparent as I can be. There's no narrative behind this. I am just simply stating whatever I'm seeing in the price action, and this is what I'm seeing. Completely unbiased. I am not long or short this asset, and will not short it or long it, right? As I am in the process of moving outside of small caps and micro caps. Okay, team. So any questions? Definitely hit me up. Okay. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well a very, very good night, and I shall catch you at the bell mañana. Adios, team. for those of you who are actually still here, I have one more thing to show you, right? So I know that usually people tend to leave. Opening up Composer, which is the algorithm that's everybody knows to have manipulation strikes. I have to say that this is one of the rarest manipulation strikes ever hit. This is a 12-hour time frame. It's so much easier to meet. It's on average we have about 7 different conditions that need to meet perfectly in order for a manipulation strike to occur. And so the shorter time frames make it a lot easier, right? It makes it way easier for us to experience that. But what I find curious here is that it got a manipulation strike on November 6th, Monday, which just happened to be the day before the split, right? So very curious how that happened. Okay, next thing, we're about to cut this off anyway. All right, next thing, you have a short signal printed from that day at the top side on the 12-hour, and it has not recovered a short signal yet. It's not. There's no long signal after that. Okay, one more thing from the ARC algorithms will be your DBSI, which gives you the strength valuations of bulls versus bears based on the closures of candles beneath the EMA 13 and the candles close above the EMA 13. You can clearly see here the bears are leading the 12-hour time frame with a 74% gain over the bulls at 26%. All right, so those of you that decided to stay, thank you so much, and I hope that this information helps you out. All right, team, have a good night. Adios.